$1.7 trillion. Gone in 90 minutes. If you bought silver as protection, you just learned something brutal. The thing you thought would save you became the thing that destroyed you. This wasn't a crash. Crashes imply choice. This was forced liquidation. When leverage breaks, price doesn't negotiate. It doesn't wait. It doesn't respect your conviction. It moves until positions are closed, at any price. That's what just happened to you. Silver didn't collapse because the story changed. Inflation is still real. The dollar is still stressed. The system is still fragile. Silver fell because it was liquid. When margin calls hit across the system, participants don't sell what they want to sell. They sell what they can sell. Silver trades deep. Silver trades fast. Silver had profits, so it became the ATM, not your protection, your funding source. For months, everyone believed the same thing. Inflation is sticky. Central banks are trapped. Hard assets must go higher. That belief created leverage, futures, options, 10-to-1 margin positions, all stacked on the same idea. When price went vertical, leverage felt invisible, until volatility spiked. Then exchanges raised margin requirements. Overnight, suddenly you needed twice the cash to hold the same position. If you didn't have it, you got liquidated. And when thousands of positions liquidate at once, there are no buyers, only sellers. That's how 90 minutes erased trillions. Institutions survived this. You didn't, not because they're smarter, because they trade liquidity. You traded narrative, and narratives feel strongest right before liquidity disappears. You didn't buy silver early when it was boring, when no one cared. You bought it when the story finally made sense, when inflation was obvious, when consensus formed, when it felt safe. But markets don't top on disagreement. They top on agreement. And that agreement just got liquidated. This isn't the first time silver has done this. 1980. Silver went from $6 to $49 in 12 months. Retail piled in at $45. Then margin rules changed. Silver collapsed to $5. If you bought at the top, you waited 31 years to break even. 31 years, 2011. Silver rallied to 48 on QE fears. Retail bought at 42. Flash crash in May, down 30% in days. Then 4 years of grinding lower. If you bought in 2011, you're still underwater. 2020. COVID panic drove silver from 12 to 29. Reddit tried to squeeze it. Same pattern, same result. Every single time, the story is identical. Big narrative. Vertical move. Retail enters late. Leverage breaks. Then decades of nothing. Here's what destroys people. Silver doesn't kill you with price. It kills you with time. You can survive a 30% drawdown. You cannot survive 10 years of dead money. Because while you're sitting there waiting for silver to come back, the rest of the market keeps moving. Stocks compound. Real estate builds equity. Opportunities pass, and you're frozen. Not because you were wrong about inflation, but because you were early in the wrong regime. That's the trap nobody warns you about. Not the crash, the wait. You weren't wrong about the narrative. You were wrong about when it matters. Right now, this is not a price-driven market. It's a liquidity-driven market. When liquidity leaves the system, correlations don't matter. Narratives don't matter. Fundamentals don't matter. Only balance sheets do. And when balance sheets are stressed, everything liquid gets sold. Silver isn't treated as a safe haven during stress. It's treated as a tool, a funding source. That's why silver often collapses before the real crisis becomes obvious. It's not the disease, it's the symptom. This wasn't the bottom. This was the trap door opening. Forced liquidations don't resolve stress. They expose it. Yes, silver might bounce. Violent liquidations often trigger short-covering rallies, but bounces are not resolution. They're pauses. And if you confuse a bounce with safety, you'll get trapped again. Stop asking, is silver bullish or bearish? That's the wrong question. Ask this instead. Am I positioned for a market where liquidity keeps leaving? Or are you positioned for a world that already ended? Because markets don't reward conviction, they reward alignment. Alignment with regime, alignment with liquidity, alignment with reality. Right now, liquidity is still leaving, and until that changes, silver is not your shield. Stop watching price every hour. Watch these. Volatility indices. When VIX spikes, margin requirements follow. Dollar liquidity, Fed balance sheet, reverse repo, Treasury general account. Cross-asset correlations. When everything sells together, it's liquidity stress, not fundamentals. These signals told you this was coming. They'll tell you when it's safe again. Not hope, not narrative, structure. This wasn't random. This was a stress test. Silver didn't fail as an asset. It failed as a shield in this environment. That distinction matters. Don't try to be brave. Don't try to make it back. Don't average down into hope. Just try to still be here when the regime actually changes. Because it will change. It always does. But only those still standing get to play the next game. And right now, survival isn't about being right. It's about staying solvent long enough to be right later. This is market signals. We don't predict bottoms. We track when structure breaks. And right now, structure is still broken. Track liquidity, not price. That's the only signal that matters.